You're not going to believe what JD Vance just said in his latest interview. He's laying out this whole vision for crypto becoming central to our financial infrastructure. Pretty eye-opening stuff if you ask me. But here's where things get spicy. You know how the Fed loves to play around with the money supply? Well, they're gearing up for another round of printing. So naturally, we need to ask ourselves, what's this going to do? Are we looking at a crypto rally? Is inflation about to go bonkers? Let's figure this out together. Also, quick heads up, something's brewing across the pond with Europe and XRP. Could be big. All right, I've rambled enough. Time to dig into the actual details. Take a listen.
The crypto speech was a big hit. And I know a lot of smart people love crypto. I know some smart people actually have reservations about it.
Sure.
For our audience, can you just kind of make the case for crypto and people who have, concerns and quite frankly don't even understand it? There are a lot of folks out there. I know a lot of people own it, but
yeah, of course. So look, I'm an owner of Bitcoin here, but I'm also the vice president of the United States. So I want to be careful, but I think the core value proposition of cryptocurrency is that it's a way of transacting and a way of storing value in a modern digital age. Look, 100 years ago, if you wanted to go and buy something, you put a dollar bill on the table, you put a gold coin on the table. The value proposition of Bitcoin is that it can serve the same function, but in a digital age, a way that's secure, that's safer from fraud, that allows people to buy and sell and store value, but in a way that's consistent with the modern technological age that we live in. Now, having said that, I fully accept there are risks to all of these things. There are always risks to new technologies. Our approach in the Trump administration is to say, let people innovate. Let people figure this stuff out on their own. If the critics of Bitcoin are right, I happen to think that they're wrong. That will eventually win out in the marketplace. If the advocates of Bitcoin are right, and I happen to agree with them, if they make their case, that's eventually going to win out in the marketplace. What you shouldn't have is a dictatorial government that tells certain industries they're not allowed to do what they need to do. You've got to let people make these decisions on their own, and that's sort of been our approach. We want common sense regulatory regimes. We want to allow the cryptocurrency industry to participate in the mainstream of the economy. But then ultimately, the laws of economics, the laws of supply and demand are going to make the determinations from there.
in Vegas, you said there's
So here's the thing nobody wants to admit. Bitcoin's the magic trick. You're watching the hand waving the wand, while the real magic happens behind the curtain. Everyone's glued to Bitcoin charts, and that's exactly the plan. Meanwhile, XRP, Stellar, Chainlink, those are quietly becoming the backbone of how money actually moves in the future. That's the network where value is going to live. That's where the actual transactions happen. And yeah, this is why I won't shut up about XRP. I've been through it all. Every corner of this industry. The DeFi projects, the NFT platforms, the latest hot narrative. I've researched it until my eyes bled. In my honest take, XRP is your best ticket to generational wealth over the next couple years. Nothing I've found compares. And right now, the numbers are screaming this at us. Volume is red across the board, except XRP. Bitcoin, people are running for the exits. Ethereum, same energy. Solana is watching its users disappear. But XRP, big institutions are backing up the truck. We're talking $1 billion pouring into spot ETFs in barely 3 weeks. That's not your average crypto bro. That's serious capital. Now think ahead with me. 6 weeks down the road, what happens? 18 weeks. XRP supply doesn't magically expand. There's only so much floating around. When that gets bought up, where does all this institutional demand go? They'll be fighting each other on exchanges, pushing prices through the roof. When that well dries up, who's still willing to part with their XRP? Everyday holders, people like you and me. Sure, maybe some whale decides to cash out, but that's about it. The stockpile isn't exactly overflowing. Let's put this in perspective. Somewhere between 2 and 3 million people on Earth hold XRP right now. We're talking about a planet with 8 billion people. That's a rounding error. So picture what happens when everyone else figures out this tech is rewiring how global finance works. By then, game over for them. They'll be scrambling to buy at $10, maybe 50, could be triple digits. Here's where it gets wild. Today, $2,000 gets you 1,000 XRP. Pretty accessible, right? But flip the price to $10 per coin. Now you need 10,000 for that same stack. Push it to 20, you're dropping 20 grand. The door closes real quick. All right, shifting gears here. Something pretty interesting is unfolding over in the EU. We're talking XRP and the European ledger getting tangled up together. Listen to this.
Europe just made a big move on crypto. XRP, Stellar, and Algorand just got officially integrated into Europe's unified digital ledger. And I think that's a very bullish sign for crypto because Europe is finally warming up to it. The world's most aggressively regulated financial region now wants to plug blockchains directly into their settlement infrastructure. So let's break down what this means for crypto and where Europe is heading. So what actually happened? The European ledger is essentially Europe's unified digital asset infrastructure that is currently being built and tested. And now XRP, Stellar, and Algorand have been verified and listed on it. So with crypto becoming more and more mainstream, it's basically the EU's attempt to future-proof and revolutionize its entire financial system. The plan is to tokenize central bank money, commercial bank money, financial instruments, and other digital assets onto one shared decentralized platform. So why did they pick XRP, Stellar, and Algorand? Well, each chain fills a real, boring, unsexy role that regulators love. XRP is the payments and settlement chain. So, of course, they would be a logical pick for the EU ledger. They've got a decade of operations under their belt, and say what you want about the XRP army, but they went to court, they won, and they are one of the safest bets for institutions to settle payments on. And Stellar is in the same wheelhouse. They power borderless payments, asset tokenization, and DeFi, of course. And for institutions, they offer payment system at a global scale. Algorand was also built for tokenization. They've got the high throughput, low fees, they're ultra scalable, and they're known to be an RWA chain. So these three are exactly the kind of public chain they would want. And I think this is a big deal because this is one of the first times a major region is openly acknowledging public chain assets inside a regulated financial infrastructure. And that puts XRP, Stellar, and Algorand in front of institutions in a way we haven't really seen before. They'll have a direct path into Europe's future payment stack when it comes to fast money transfers, cross-border payments, and a push of tokenized assets into regulated markets. And if this works, we can expect other regions to copy the model.
Look at the global map for a second. UK? XRP's got the green light. US? Infrastructure's in place. Japan? Already wired up. Middle East? Check. Africa? Yep. Seriously, throw a dart at a world map and Ripple's probably already operating there. Singapore and the rest of Southeast Asia? Same story. Now, here's what we need to unpack. December 1st marked the end of quantitative tightening. That era just closed. So what's next? The printing presses are warming back up. Money's about to flow again. But the real question we should be asking ourselves is this: how does that shift actually hit our holdings? What happens to the stuff we're invested in? Let's dig into this because the implications are huge. Take a listen to this.
I think QT ending on December 1st is historic. And it was well telegraphed, so no one should be surprised that it ended. But I think it's historic because in a way, it really, signals the beginning of a new era of what the role of the Fed is in the monetary policy toolkits it's been able to build upon since. So we used to call the Fed the lender of last resort. And I think what we're now going to have to admit is with the adoption of the standing repo facility that's been put in place during the QT era or thereafter, where it is essentially now the lender of continuous resort, right? I mean, just yesterday on December 1st, it was tapped for close to $14 billion, like for liquidity purposes. Like the day QT ended, the Fed just intervened. It used to be a big deal. And now the Fed just intervenes every day. So the role of monetary policy that is now being conducted in this regime, which is basically what when Fed governors talk about the ample reserve system is, like this is the future of the Fed. We don't want to go back to a scarce reserve system. We're not going to be in an abundant reserve system, but we're in this now ample reserve system where we have now believed that $6 trillion is like the right amount of balance sheet capital for the Fed to be maintaining and actually having unlimited capital on standby upon the request of the banks. And that means you're basically muting the possibility of there ever being like a financial crisis. You're muting price discovery and liquidity discovery. And so, yeah, I think QT ending alongside having the standing repo facility in place is a totally new regime. And this should matter to most investors because historically, those who have looked at the Fed acting as a lender of last resort to step in when there's tremendous volatility in the market the structure that we have now inherited is that we may not really see that kind of volatility again. Like something will break differently, and it will have to break, I think, much more astronomically because of the capacity for what this means. And in that sense, it doesn't surprise me that the equity market will continue to go up. If you really think the whole play for a while was you needed the equity market to kind of participate in price action where you saw liquidity breaks, like we're just going to see less of these liquidity events.
Does Bitcoin go up because QT ended?
I think Bitcoin will go up when there's another acronym that comes out of the Scrabble board that the Fed has to rediscover to create a new emergency and intervention program. And I think part of why QT ending is a good deal is because now everyone can go back to the drawing board and figure out what the next thing it's going to break.
Keep this in mind. XRP is already integrated into the repo market. That's a system moving $2 to $8 trillion through it each day. Yeah, you heard that right, per day. So whatever economic chaos is about to unfold, they're ready. The plumbing's already installed and running. Quantitative easing, QE, usually means easier financial conditions, higher asset prices, and more liquidity into the system. But over time, it can feed inflation, bubbles, and sharper downturns. QE is when the Federal Reserve creates bank reserves and uses them to buy large amounts of treasuries and other securities like MBS. Once policy rates are already near zero, those purchases push long-term yields down, inject liquidity into the banking system, and encourage investors to rotate into riskier assets to earn a return. Typical effects on the US economy. Lower long-term rates reduce borrowing costs for mortgages, corporate debt, and government financing, which tends to support growth and lower unemployment in the short term. At the same time, the extra liquidity and richer asset valuations can contribute to higher inflation, especially in the housing and other interest rate sensitive sectors. Over multiple years, repeated QE rounds can lead to asset price inflation, meaning financial and real assets rise faster than underlying productivity, increasing inequality and risk of misallocation of capital. Typical effects on the stock market. By driving bond yields, lower QE makes dividends and earnings from equities look relatively more attractive, so flows often chase stocks and push indices higher. Impractical work of the US QE rounds finds that lower discount rates and improved liquidity materially raise stock prices, in part via wealth effect and consumer spending. QE adds dollar liquidity and suppresses yields across traditional assets, which can increase the demand for alternative and higher beta plays like Bitcoin and other crypto assets via portfolio rebalancing channels. Studies looking at the US and ECB QE shocks find that announcements and liquidity waves can have statistically significant positive impact on Bitcoin and Ethereum prices, largely through investor sentiment and hedging diversification demand. However, the link is not mechanical. In some episodes, QE or ITS coincide with crypto drawdowns when macro expectations or risk sentiment deteriorated, showing that the narrative positioning matter as much as raw liquidity. Markets are jittery at the moment. Stay sharp out there. Meanwhile, I'm personally doubling down on XRP and a few select cryptos. My gut says we're looking at some quick upside momentum. Okay, this stat caught my attention. Gen Z is already on chain. That's not just a headline, it's the panic button for every major financial institution. Here's what happened. Banks woke up one day and realized an entire generation thinks stock trading is about as exciting as watching paint dry. These kids are in Telegram groups, DAO voting, staking tokens for yield. Ask them about opening a Schwab account and you'll get blank stares. So now there's a scramble. All those old financial products, stocks, bonds, ETFs, they need a makeover. The answer? Slap them on a blockchain and call it tokenization. Basically, chase the audience instead of waiting for them to show up. That's why value keeps migrating on chain. It's following the attention, and the attention's already there. Listen to this.
More Gen Z owns crypto than stock. So I think we just need to make sure that, this is where it's going. They're digital first. Blockchain can solve that for them, and we can help people get in the game.
Yeah, I think y'all are way ahead. Is there anybody else out there in the market doing something similar that you guys have seen? Because I haven't. I haven't seen anybody else that's being quite as innovative as you guys.
I think people are trying, right? I think
Yeah.
everybody is looking at how to serve this market. I think if you don't have a close relationship with the community, just like, Uphold an XRP, right? Never delisted. We talk with our XRP holders on a regular basis.
So hold up, is the Riddler actually nailing these calls or what? Paul Atkins rings the bell. Yeah, that just happened live at the New York Stock Exchange. Then we've got Vanguard ship has sailed. And guess what? Vanguard's officially thrown their hat into the ETF ring. Merry Christmas on the bell. Bearable Guy decoded, December 17th to December 23rd. We are in Saturn 8. 8 days from the XRP lawsuit. July 13th, 2023, the first day of Saturn, December 17th, 2025. Are we about to witness something absolutely wild unfold? That's definitely the vibe from a ton of people watching this space right now. Go ahead and crush your weekend, my friend. Big shout out for being here with me today. I'm crossing my fingers that you're actually absorbing useful stuff about crypto and the economic landscape. We intentionally cover this whole spectrum because, let's be real, every piece affects the others. Seriously, you rock for sticking around. Can't wait to connect again in the next upload.